The U.S. government spent $350 billion in the first week of October. That's like $13 trillion. Our deficits are like $35 trillion. It's not going to slow down, whether it's a Democrat with Kamala or Trump, the Republican. The spending is going to continue, and gold's going to continue higher. There'll be moves up and down, but over the longer term, gold's going to be much higher. And every way I look at it, I see gold, I don't know, 3,000, 4,000, 5,000 in a few years. But the problem with the mining sector is when the inflation pushes the price of gold higher, as I said before, pushes mining costs higher. So even though the price of gold will be double in a few years from now, silver is growing massively. It's expected to grow 10x over the next, 5-10 years. It's going to be a major consumer of silver.
The U.S. government spent $350 billion in the first week of October, contributing to a ballooning deficit of around $35 trillion. As this trend persists, many expect gold prices to rise significantly over the long term despite short-term fluctuations, with predictions suggesting gold could reach $3,000 to $5,000 in the coming years. Silver, driven by growing industrial demand, could also experience massive growth, with expectations of a 10x increase over the next 5 to 10 years. The speaker, Garrett Goggin, a financial analyst and expert in precious metals, particularly gold and silver, elucidates many mining companies are underperforming despite the rising price of gold, with most seeing only modest gains year to date. Focusing on fundamentals rather than short-term economic fluctuations reveals significant undervaluation in these companies. Garrett recalls some companies like Zager, a pure silver miner, are ramping up production while reducing costs, which could lead to profits increasing 4 times or 5 times. These opportunities show that current investments are like spending dimes to pick up dollars, especially as gold and silver prices rise. With short-lived price surges, Garrett illustrates that silver is more volatile than gold. Higher silver prices have boosted profits this year, but silver mining is generally less profitable since many miners sell concentrate at a reduced value. Low-grade miners often dilute shares and only benefit briefly from price spikes. In contrast, high-grade miners following the Archie rule, revenue 2x operating costs, consistently deliver strong profits, like the Fruta del Norte gold deposit. If you enjoyed the video, please give it a thumbs up and subscribe to stay updated on our latest content. Currently, only 11% of our viewers are subscribed. Help us reach our goal of 1,000 subscribers by hitting that subscribe button.
In order to produce more underlying value for the company. And these miners, majority are not keeping up with the price of gold right now. Price of gold's gone up, but these mining companies, a lot of them are still languishing. They're only up a few percent year to date. There's a few that are up a lot. But I tend to stick, I'm a fundamental analyst, and I tend to steer clear of the, economic wiggles. Focusing on the fundamentals, I'm able to maintain an even keel, and I see the undervaluation in these projects, and I see the value generation in these projects. So like the price of gold and silver have been down a couple of days, doesn't bother me at all because I just see these companies being valued more. I just spoke to, Benoit LaSalle at Aya. People love Zager. Zager is pure silver. They're bumping up to about 3,500 tons a day. But their costs are going to go down. Their profits are going to go up 4x, 5x. But a lot of people aren't even looking at boumediene. Boumediene is like 23 million tons of material at about 400 grams a ton average grade. It's extremely economic. You start modeling that, as I do, it's worth billions, and it's worth more than Zager alone. And so I start looking at these and adding the numbers up, especially with the higher gold and silver price. And the value is absolutely compelling. You're spending dimes to pick up dollars. Silver is more volatile, so as gold goes higher, silver will follow. Silver goes on massive runs, but those are pretty short-lived. The thing that I really like this year is that silver, it's gone 32, it's trading at 30, but it's been higher for quarter after quarter after quarter. This is driving profits because, they're selling silver on a daily basis. So as long as the average cost stays higher, they're making more and more money. And the one of the things regarding the silver industry is it's generally not as profitable as the gold sector because the majority of silver miners sell concentrate. Not all of them. Pure silver, they produce doré bars. Concentrate, they only get paid like 85% of the contained metal in there. So the margins are smaller. And there's a lot of people out there on Twitter and everywhere else, and they are going after the lower grade, uneconomic moose pastures that, tread water year after year. And then when the price of silver really gets going, they ramp up, 5x, 10x. But the big silver and gold ramps only happen like, I don't know, 3% of the time. But that other 90% of the time, they're dilutive. They keep selling shares. I'd rather position myself for the other 97% of the time. And then, one of the things too is, I'm friends with Peter McGough, world famous silver geologist, and he's shared this thing called Archie's rule. And it has to do with grade. In order to find economic deposits, you need to have your net smelter revenue needs to be 2x operating costs. And that's driven entirely by grade, right? Because costs are relatively fixed on a per tonnage basis. The only thing that moves the needle for profits is grade. The more higher grade, the more revenue you get, which, falls right to the bottom line. So, I stick to these, high grade, highly profitable miners. And a lot of people think these lower grade ones, they ramp up when the price of gold and silver get wrong. But look at Lundin Gold with Fruta del Norte in Ecuador. That's one of the leading gold stocks. That's the best gold deposit in the world. They have extremely high grades, I think of 11 grams a ton. They generate a tremendous amount of free cash flow. They're paying dividends. They buy back shares. Good things happen to highly profitable companies, and vice versa. Bad things happen to the low grade stuff.
Silver trades at a significant discount to gold but occasionally spikes, like in 1980 and 2021. Garrett explains these surges, often driving the gold-silver ratio down to 25 to 30, are brief and last only a day or two. Instead of timing these short-term spikes, it's more beneficial to see silver prices rise and remain elevated, which boosts the long-term profitability of silver miners. Garrett exposes that silver demand is set to grow significantly. Solar panels use about 20 grams per panel and are expected to increase 10 times over the next 5 to 10 years. Electric vehicles, EVs, batteries, and military applications also heavily rely on silver due to its superior conductivity. Historically, when the Fed cuts rates, it has preceded market crashes, like in 2000, 2008, and 2019. However, the government and the Fed are spending heavily to avoid a market decline. This massive spending could keep markets like the Dow rising, but it would lead to severe inflation. Assets like gold, outperforming during high inflation, become critical as the US dollar loses purchasing power. Continued government spending could further erode the currency's value with no balanced budget, leading to even higher inflation. Let's have a look back at the interview.
It always trades at a large discount to gold, but that very small percent of the time, silver will spike up to $50 in 1980. Or, it spiked up, in 2021, 30 or something like that. But these spikes only last a day or two. You know what I mean? And that'll drive the ratio back to 25 to 30, but it only lasts a day or two. So, I'm much more happy to see the silver price rise up here. It makes all these silver miners a lot more profitable and stay here over the longer term. I'm not interested in trying to time a short-term spike. You get solar that uses about 20 grams of silver per panel. Silver is growing massively. It's expected to grow 10x over the next 5-10 years. It's going to be a major consumer of silver. You get all the EVs, you get the batteries that use silver, and then Samsung supposedly came out with a new battery that uses a kilo of silver, 1,000 grams per ton. And it's just going to continue driving silver demand. And silver, it's mostly used as solder for a lot of electronic circuits, like in the TV or your computer. It'll be a dot here, a dot here. But military applications, like a Tomahawk missile, it's rumored that it's got 300 ounces of silver to make one Tomahawk missile. Why? Because silver has the highest conductivity of all metal, and the military doesn't care what stuff costs. They just want the best stuff. So, the military uses a lot of it. And it was funny. I was speaking to Keith Newmar, and he's like, I told him that. And he's like, well, we should start mining Afghanistan then. Every time the Fed has started cutting rates, the economy slows down, the market crash. It preceded the recession, crash in 2000, crash in 2008, crash in 2019. To be honest with you, here's the alternative view. I think we're beyond that. I think the government and the Fed are spending so much money that they are attempting to offset the next major market decline. They don't want that to happen, because when that happens, the real estate market slows down, all assets get smoked, the economy goes into a tank. But what if they were able to prevent this by spending lots of money? And then, the Dow Jones could go to, I don't know, whatever, 100,000, but where that's going to kick out and you're going to see that is an inflation. A bottle of Coke's probably going to be $50 at that time. And I believe that's the road we're going down right now. Like, if you look at the S&P inflation adjusted, it's only up, whatever, 200, 300% over the past 20 years. Gold has crushed that return. That's why, gold is the best place to be in times of high inflation. And this is one of those times, and where, the world's reserve currency, is shifted from, Holland to Spain to UK. And U.S. has had it for 100 years, and this is how they all end, with overspending, too much government insight, and their currency becomes worthless.
The U.S. government's continued massive spending drives inflation, erodes purchasing power, and contributes to rising deficits. This economic environment supports a long-term bullish outlook for gold and silver, with both metals expected to see significant price increases. While mining companies are still undervalued, the growing industrial demand for silver, driven by sectors like solar, EVs, and military applications, presents strong investment opportunities. As inflation accelerates, precious metals remain a reliable hedge against the weakening dollar. How might rising inflation impact consumer behavior and investment strategies in the coming years? What role do you think high-grade mining projects will play in supporting future demand for gold and silver? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel first, watch the video, and turn on post notifications for more videos like this. Until next time.